Okay, well, I am going to get started just because we, of course, want to keep this a nice conversation and, make it short and sweet and compelling all at the same time. So I am on video chat and just wanted to say hello and, of course, introduce myself. My name is Jennifer Connolly, and I work for Highland Capital Brokerage, and we are, of course, one of the strategic partners for Females in Finance. So we're really excited to partner with Cheryl and everybody else within the network and within the organization. So really look forward to having that opportunity to get to know each of you and your practices a little bit better. At Highland, you probably already know this. Some of you may already work with us, others may not. From an insurance perspective, we, of course, support many different types of insurance. So that's life insurance, long-term care, DI, and annuities. And we have a very big team of people that can help process the business. We've got a lot of underwriters that work in our company that help support that business with the carriers that we work with, and case managers. We also, of course, will help you individually grow that piece of your practice. If that's something that you're looking to do, we have a lot of different ways that we can do that. And I won't go into all of those ways today just because it is a customized approach with each of you from an individual point of view. So we really don't have a one size fits all. We're really all about being a strategic partner and being very hands-on and collaborative in how we work with you. So we hope we get that opportunity, and just wanted to say hello. And Anne-Marie Norek is also on the call, and I think she's still on the video. She works with us at Highland as well, and and with the Females in Finance Network. So say hello, Anne-Marie, if you're there.
Good morning.
So this call is open. So if you are going to listen, if you don't mind muting your lines, that would be great. You could certainly jump in at any time and ask a question, whether it's verbally and you want to pop on the video chat, that's great too. If you just want to put on the microphone, you can certainly ask a question that way. We also have a chat section on the web portion of this webinar. So if you see that, certainly type questions along the way, and Anne-Marie and I will make sure that Scott can answer those for you. So without further ado, we really wanted to focus in on the month of May, as you all know, is Disability Month. And we really wanted to talk to you and have a carrier person who we have today on the call, Scott McCarthy, who works for Emeritus. He's actually one of the regional VPs there. Talk about how it actually can help you have a different conversation with your clients and with your customers. And if you don't talk about disability and what it can do, he has really great ways to do that. A lot of it through storytelling and a lot of it through impactful ways to make a positive approach with your customers. So like I said, Scott's a regional VP for DI sales and distribution for the Western region with Emeritus. He's been in the disability insurance business for the past 15 years with MassMutual and MetLife. In his current role, Scott helps both financial advisors and brokerage agencies to understand how to best position income protection to their clients and their brokers. He's based in the Bay Area of California, lucky him, and enjoys a full and busy life with his wife and 4 boys. So, Scott, would love to welcome you to this conversation. I know that you have a great style about you and hopefully can help our female advisors learn how to talk about DI a little bit more with their customers if they don't already. And by the way, if you do want to work with us at Highland, we have a way we can do that for you. We partner with a really nice big company, Treluma, out on the West Coast, and they will help support the DI part of your practice as well. So with that, Scott, take it away.
All right, thank you so much. Well, thank you guys so much for having me on your call. I really do appreciate the opportunity to give my presentation on what I call the conversations that move, which is really just a way that I've kind of come to view presenting disability insurance to clients. And it's really something that what we'll talk about today is a lot more about how we put together the conversation that we use with clients. What we'll go through today is actually somewhat revolutionary, at least in terms of where the disability industry is concerned. And obviously it's DI Awareness Month, so we're taking advantage of that and really focusing on this area. not just because I think that there's some value here for you and your clients. I think that one of the things that people overlook about disability insurance, and why we really do take a lot of time during Disability Awareness Month to make sure that you're aware of where it fits and how you can utilize it, is because disability insurance, I kind of look at as a gateway product. It's something that touches on so many different aspects of your clients' financial lives, if you will. I think it really can open a lot of doors and open a lot of conversations, and we'll kind of touch a little bit on that. I think the most important thing that we're going to do today, though, is probably change your frame of reference. And one of the things we may do is change kind of how you see what disability insurance is for yourself, for your practice, and more importantly, for your clients. So we'll jump into this and get right into the kind of the meat of the presentation and start to talk a little bit here. Of course, we've got our disclosures. What this presentation was built on was some research that was done by MetLife. As it was mentioned in my bio, I spent some time as a disability insurance wholesaler for MetLife, and this presentation's findings came out of a research study that was done, and these were kind of the high-level conclusions that were taken away from the research that was done with focus groups, with interviews. It was an exhaustive process focused on clients that we looked at as ideal clients for DI, but for whatever reason, we weren't getting the kind of engagement with these groups. And as we look through this slide and kind of see the overview of what the research confirmed, now this study was done 7-8 years ago. I don't think that the findings here are tremendously different than what you would see when you have these conversations today. When we look at disability insurance, the wholesalers are struggling with the fact that producers tend to think that it's very complicated in terms of how you sell it, how you position it. It's a conversation that advisors tend to be very uncomfortable with, and that's difficult then for us wholesalers when we're trying to assist advisors. If immediately right from the jump, advisors are thinking, gosh, that's just too overwhelming, I can't deal with that right now, that's just another thing I can't add to my plate. And we understand that, but it's certainly a challenge that we face. For the producers, and specifically the ones that we focus here in this group, these are folks that sell life insurance, that are having conversations about income protection, and yet they are not engaging in selling disability insurance. And the reasons here, again, not terribly surprising for myself, who's been in the industry, and for many of you on this call, you may see these and think, yep, that's pretty much it. I think there's a lot of concern that the conversations that traditionally have been used to drive home the point of why you need disability insurance tend to be kind of a hard sale positioning. A lot of that is just based on how it's been taught, how the carriers have oriented themselves in terms of positioning the product. This leads to this idea that any conversation that gets into the DI realm is probably going to end up harming your client relationship, because your clients are going to perceive this as being pushed on them as this kind of secondary sale. Well, we talked about life insurance, we've talked about some retirement planning, and now there's this DI thing that they're bringing up. I don't even know what DI means. I mean, there's just all this kind of uncertainty and confusion and fear, and the producers just immediately, because they're putting this box, they hesitate to have these conversations. The other thing, and I think this is unique to some degree to disability insurance, and I don't know why. I've been doing this a long time. I'm still trying to figure it out. But for some reason, producers tend to think that the clients are just not going to get the details, and it's on them as producers to drive home all the various details of how a disability insurance policy works or how it could possibly work in every possible scenario. For whatever reason, I have had more conversations with producers about the details within a specimen contract around the DI product than I've ever had related to, say, life insurance or even long-term care insurance. There's just this desire from producers, because it may not be a product they engage with on a regular basis, to know all the details. And then once they know all the details, they can't help but just want to dump all that on to their clients. And that, to some degree, actually hurts the situation more than helps it. Kind of one first takeaway from this, I think when we're thinking about disability insurance and having these conversations with our clients, I think it's important to remember that when we talk to them about life insurance, when we talk to them about retirement planning, we tend to focus on the big picture concepts and try to keep things as simple as possible. And I think we need to understand that that's what we need to make sure we're doing here as well. What I think stands out the most about what the research confirmed, and then we'll get into kind of the meat of where it took us, is if you look at what the clients were concerned about, it doesn't match up with what the distribution side is concerned about. If you notice here, they just don't know what they don't know. They don't know what they should have, if they have enough. They're more concerned about making sure that they have the right amount of coverage, because they're not as worried about the details. Again, their understanding of this, if they have an understanding, typically is going to be more that big picture. They need to have an understanding of, what is my plan for this? And that's really where the focus, I think, should be. But more importantly, if we take one kind of really high level glance at all these levels, and I've already kind of mentioned the words I think that sum it up best: fear and confusion, right? There's a lot of fear and confusion or uncertainty all kind of tied up in all these concerns. So how do we get past that? How do we help our clients to move forward and have a conversation that gets them engaged, that actually kind of captures their interest in such a way where we can move this conversation forward? And I think this is where we have this radical shift. Because what we found is, and what we were led to, is that we need to have a more positive and benefits-oriented approach to the DI conversation. I think the other part of this that's kind of not spelled out here, but is somewhat captured by this idea of being positive and benefits-oriented, is also being empathetic. Now, from my perspective, if I'm talking to a group of advisors, this approach can help all types of advisors. But I think when we're talking about having a positive, benefits-oriented approach and really a more empathetic approach and understanding approach, I think that this positions women advisors to really take advantage of this approach and make a lot more out of it than most male advisors, because I think male advisors have a challenge. They kind of tend to like to take the approach of driving home a message that's kind of powerful. And I think a lot of guys tend to feel like, okay, well, let's just scare them to death. That will shake their confidence, will shake shake them to their core, and that will get them to act. What this research has really found, and I think what, in a bigger picture perspective, what a lot of neurological studies, a lot of sales training has found, we need to kind of reorient our approach to being more positive and benefits oriented. And I do think that there's a tremendous advantage for women advisors to do this, just because their nature tends to be more positive, more benefits oriented, and more empathetic. There's going to be a couple of key things, though, that we'll need to do to really embrace this approach. How do we get to a place where we're having a more positive and benefits-oriented conversation with our clients? One of the first things we need to do is, skipped ahead. One of the first things that we need to do is stop saying disability insurance, and even worse, DI. Those are unfortunately things that we use because they're industry terms, and that's what our product is called. But let's be honest, we didn't get the best name out there in the insurance industry. I think it's noticeable that disability insurance is a bad name, but I think it really stands out in stark contrast when you compare it to something like life insurance. You don't get the primary benefit from that product while you're alive. The primary benefit is provided when someone dies, but they didn't call it death insurance, they called it life insurance, right? They made this very intentional decision to focus on a more positive oriented name. Disability insurance didn't do that, right? Disability, unfortunately for most people, the only connection that they have to that is thinking of that parking space in the front of the grocery store with the blue square and the wheelchair. So we need to get away from that because the connotations and the connections that we have with something like disability insurance are negative, and it doesn't set us off on the right foot. What we need to talk about is income protection. Or if we want to take it one step further and really help to connect to everything we do, income protection is a great way to get started. It's a great shorthand. But another phrase you want to drop into your language when you're talking with clients, and again, at every level, if we want to connect this to the bigger picture, we want to use terminology that allows us to use it flexibly within this kind of bigger framework. I like to use asset protection and income continuation. I find that to be really central to what we're doing here, but also central to what you're doing throughout all of your financial planning tools and solutions. Whether we're talking about life insurance, which also protects the surviving spouse's assets and provides them with an income continuation vehicle, whether it be even their investments, right? The way their investments are designed, they're designed and structured in such a way where most of those assets are protected from fluctuations in the market, right? So that they're protected so that they can grow to some point, generate income. Asset protection and income continuation is a core promise of disability insurance. So let's talk about what it does instead of what it is. That's another way we can have this more positive and benefits-oriented approach, because that's talking about the benefit that's provided. That's exactly what we're doing. The other thing I want to emphasize here is that we want to make sure we're talking with the right clients. And those right clients are folks that are in their late 30s, early 40s. They probably have a family. They're in a situation where they're really on that upward trajectory in terms of accumulation of assets. And so we've got a lot of assets that we're in position that we need to protect because we're going to grow and protect their money. And this is a big part of that. The other thing that we need to understand is the reason it's important for those folks in their 30s and 40s is they have that kind of critical mass of a growth of assets that is going to be the foundation for their retirement. But they're also at a point where they're going to need that income for a long period of time, right? They're 20, 25, 30 years away from retiring. And so they need not only that asset protection, but they also need that income continuation. Talk a little bit about more why that is, but those are kind of the core concepts that we want to drive home at this point. Is just kind of think about what we're doing, asset protection, income continuation, or if we use the shorthand, just income protection, but think about what we're doing as opposed to talking about it in kind of these very nebulous generic terms like DI. It could be hard to get out of saying that, especially if you've talked about the product before. For those of you who haven't though, your advantage is jumping into this knowing the right way to position this and not starting off at a disadvantage. Now you may be wondering, okay, how do we do this functionally? Like, what are some of the other key things that I need to do to start this conversation more effectively? And for those of you who maybe have had some training around disability insurance, you're probably already hearing some things that are fairly different than what you've heard in those sales presentations or sales trainings. Now, the reason for this is not only what we're seeing here and the research findings that kind of drove this presentation. It also comes from my personal experience. And this personal experience actually happened around the same time that this research was shown to us as wholesalers at MetLife. And so the confluence of events was kind of a happy coincidence, but it was really, really life-changing for me in the sense that it's framed my view of how we should be talking about asset protection and income continuation with our clients, with the financial field in general. And that experience was, well, my oldest child, my oldest son, he was about 6, 7 years old, and he was having a little trouble in school. And it's a little difficult with a 6, 7-year-old boy to tell if they've got some attention deficit issues or if they're just being a 6, 7-year-old boy. Those two things are fairly compatible, and so it can be a little challenging to figure out how to handle those situations. But my wife's a teacher, so I had a little bit of an advantage in that sense. So she had a conversation with the pediatrician, and we had a discussion. She had a discussion with them, and kind of mapped out the options. We could go to the psychiatrist, the kitty drug dealer, and go that way and start some medication, or we could go more kind of the touchy-feely way and go with the child psychologist or the really expensive play date. My wife wanted to kind of stay away from medication and start off with kind of more of a conversational approach and start with the psychologist, which was great because to start that process, he wanted to meet with us first and then, meet with our son later. This was awesome for me because it was an opportunity to kind of get some insight as to what he was going to be doing. The unintended benefit was what we ended up talking about and what his approach was, all based on research around how the child's brain worked, basic cognitive functions, how any of our brains work really, and all of the ways that he had kind of come about learning about how to help modify child behavior by having more positive language. Green language is what he called it, and getting away from red language or negative language. Now, we've already talked that this whole approach is about being more positive and benefits oriented. So already my antenna went up and thought, oh, this is interesting stuff. And the more that he talked, the more we got into it, the more I realized that so much of what he was talking about in using green language, in telling people what you want them to do, as opposed to telling them what to stop doing, all this stuff was things that I had heard in sales training in one form or another, because again, it's based on this neurological science and an understanding of how the brain works and how we want to receive messages and how we're more likely to act on messages that are positioned in certain ways. And so I was able to take kind of the information that he was providing in a book that he had written around this idea of positive language and kind of incorporate it into this concept here, which is essentially how we can shift this conversation, how we can take it from what it's traditionally been, which is a negative focused conversation, and make it a more positive conversation just by changing up the language that we use. So one of the core concepts that we already talked about here is, instead of talking about all the terrible things that can happen, which is what we tend to fall into. This is the trap that we get caught into, is talking about, we ask the question, or this is, again, one of the more popular ways carriers and wholesalers have set it up for advisors. I used to do it myself. I'd tell advisors, all you have to do to start this conversation is just ask those clients, if you were sick or hurt and couldn't work, how would you replace that lost income? That's focusing on protection against a disability. That's the wrong focus. Think of it even more drastically. In this situation, what we're really saying is, what are you doing? What would you do if you were sick or hurt? How would you replace your lost income? It's kind of accusing them of a bit of financial malpractice. We're kind of putting a lot of negative emphasis on what they haven't done. We're not giving them any positive orientation. We're not telling them about the benefits. We're focusing our attention on them negatively. Well, what's the reaction going to be to that? Well, they're going to push back with objections. And carriers, of course, we're great at providing pieces as to how to deal with objections. Why don't we just figure out a way where we can talk about protection for income or protection for those assets in such a way where we skip that whole part of the game? Instead of asking that question of what would you do if you were sick or hurt, let's just change the framework and use more positive green language to get ourselves in a position to have a conversation where we're now sitting on the same side of the table as the client and able to work forward from there. How can we do this? Well, we can do it like this. I'm concerned that you may have an incomplete income protection plan, and I'd be very happy to work with you like I do with all of my clients to address that plan and make sure you understand how it may affect you going forward. Now, a couple things that I've done there. First of all, it's not a question, which is an important thing because questions are confrontational, whether you may think that or not. The brain does take questions as challenges. So we're stepping away from it being a question and we're making it a statement. I'm concerned. This again is where I talked about empathy earlier. This is exactly where your empathetic or your ability to connect via empathy, this is a key aspect here. Your concern and your demonstration of concern, I think, is going to help motivate them to action because they came to you for advice. You're the expert. If you're concerned, now they're a little like, oh gosh, maybe this is something I should be thinking about. Maybe this is something I should focus on. Now we've got them a little bit agitated, but we've got them also thinking. We're not going so hard, what would you do if you were sick or hurt, right? That's a hard challenge. That's pushing back. That's going to hit that part of the brain, that fight or flight part of the brain. It's going to be pushing back pretty quickly. But if we're just saying we're concerned, now they're just a little bit interested. We've got the gears starting to turn. We're going to continue that process with the next part of it. I'm concerned that you have an incomplete income protection plan. They're thinking, what? I have an incomplete what? We just gave them something they didn't have the minute before they walked through the door. They now have an incomplete income protection plan. Now we've really got those gears turning. We have now taken the conversation completely away from that sensitive amygdala, that reactionary part of the brain, and we're now moving up to the frontal lobe. We're moving to the part of the brain that can engage in a conversation where we can actually start to uncover what it is that they need and what's going to satisfy their concerns. Because we have this incomplete income protection plan that we've now given them, that we now get to work through with them. And now that we've had these couple of positions out there, we've generated some concern. We've got this incomplete income protection plan that we work with all of our clients on. This is also important. This is one of these little tricks. You work with all your clients on this, and so they're starting to think, well, gosh, if they do this with everyone else, I want to make sure that I'm doing it too. Let's use some of that social conditioning to get these folks to start considering what it is that they're putting out there at risk. Now for us, we're thinking in those terms, but for the client, we want them to understand what we're focused on, what we're concerned about is that incomplete plan. What's great about talking about an incomplete income protection plan is it also allows us to kind of flex to any part of the conversation that kind of resonates with the client. Because again, asset protection and income continuation, that incomplete protection plan could be focusing on life insurance. It could be focusing on a long-term care plan. And it could, and it should, at some point, focus on putting together some type of plan for if they are sick or hurt and can't work. This allows us to connect to all the other products that fall into that similar bucket of asset protection and income continuation. And now we're not having a secondary conversation about DI, right? Now we're just talking about asset protection and income continuation, and we've already done that at some level. And that's where we can connect this and make it less of a secondary or tertiary piece of the conversation and help them understand this is a central part of what we're going to do to get you to where you want to go. And where do we want them to go? Well, we want to get them to be able to retire the way they want to. This is one of the areas that I think we also have a tremendous advantage of right now in terms of changing this conversation and really making this different than it's been in the past. Because in the past, I think there was this tendency, again, to just kind of scare people into wanting to do this. And what they would scare them on is, you know, if you don't have an income, you're going to lose everything. And that's true. I mean, there's definitely some negative ramifications if you don't have an income protection plan in place and you are sick or hurt and can't work. But let's talk specifically about what it is that they're probably going to lose. Because if they're sick or hurt and can't work, they're probably not going to sell their house because they still need somewhere to live. They might sell a car, but how long does that actually extend that window of time in which they protected those assets? What we really are concerned about, because it's something else that we tend to get involved in when we're talking about financial services, is where they're going to go to get those funds to be able to continue living their life based on their current expenses and debt. And that's typically going to be their retirement funds, whether it's a 401k or other investments that they have set aside for retirement. Because we don't really have pensions anymore, most individuals are saving themselves for their retirement in some sort of vehicle, and they do have access to that money. What's really at risk here, the asset this solution protects, is their retirement funds. So what we're doing here, if we're focusing the emphasis correctly, is helping them to understand that we want them to retire the way they want to. We want them to retire based on their terms, and how we can build additional stability into the trajectory that they're on is to make sure that they're not knocked off course because they're sick or hurt and can't work. We want to make sure, and the reason we are concerned is that we know how damaging it can be to take money out of that retirement vehicle before you want to retire. And so we want to make sure that what we're emphasizing here is this process of planning and putting together an asset protection and income continuation plan is so that you can have a greater amount of stability to get that to the retirement that they want to have, the retirement that they're planning for. This is our way of kind of connecting the dots back. Now, you may think, okay, this is interesting. How is this really effective? And I think we already do this in other places, right? This idea of making sure that we're setting up a conversation where we're focusing on the benefits, but we want to make sure that we're tying it back to those benefits on a regular basis. Because if we're just talking about how we're concerned about their incomplete income protection plan, it doesn't really drive home the point. And the other thing I found very interesting about my interaction with that child psychologist, and like I said, it sounded a lot like a lot of the sales training I had, which at the time didn't make a ton of sense. But as I've reflected on it more, it makes actually a lot of sense. Because whether you're dealing with children or you're dealing with clients, a lot of the training tends to be interchangeable, right? You can trade one for the other. So one takeaway you get, whether you get nothing else, and I hope you get a lot from this, but one thing you can take away is that any great sales training you get, you can use on your children. And really good parenting advice a lot of times will help work with your clients. Because in both situations, we're trying to take an unwilling party and motivate them to do something that's in their best interests, but against their will. Whether it's planning for retirement or putting together a comprehensive financial plan, which they want to do, but not really, or it's, hey, you need to eat your broccoli. In both cases, they don't want to do it. There's benefits to them, but they may not know those benefits right away, right? They can't see that the broccoli will help them grow bigger and stronger. They can't see that all these actions will help them get to the retirement that they want to. But we do have the advantage with the adults that we can help them to see this picture of greater stability leading to this kind of end game of a retirement that they want to. Whereas with the child, we have to use ice cream, right? We have to show them that you're going to get a more immediate benefit. With adults, we do have the advantage that they do understand that they're doing something today for the benefit of tomorrow can actually have some tremendous impacts. A couple other things we'll talk about here. Really what we're doing is making sure that we focus again on the benefits of having this. This is going to provide them more stability, more ability to get them to the retirement that they want to have. The proper way to have this kind of approach is not to do it transactionally. Again, transactional sale in this process isolates it, right? It makes it more about that one product solution, where again, if we're talking about asset protection and income continuation, we're going to talk about what their cash flow is. We're going to talk about what their emergency fund or their cash holdings are. How does that play into disability insurance? Well, the more expenses and debt they have, the more we have to plan for to protect. That emergency fund or that cash holdings piece is a conversation I'm sure a lot of you have with your clients already, where that factors into what we're doing. Well, the best disability policies out there typically don't kick in until 3 months after the condition has started. We've got these things called elimination periods or waiting periods that are 90 days long. So if we're putting together a complete income protection plan, it's going to manage those debt and expenses. It's going to deal with that period of time where they're self-insured for the first 3 months. And then it's going to talk about, well, are you going to take from your retirement, or would you rather shift that risk to something else like an insurance company and know that you've got a stop loss built in? Now, if we're talking about all these pieces, and again, 2 of those you're probably talking about just in the normal course of planning, these are more patient conversations that allow you to build some rapport and build an understanding of how concerned a client is or how concerned they're becoming. As these things start to develop, they may find that they're much more concerned about this need than they were when you first brought it up. And these patient conversations allow you to kind of develop a solution for them that fits their needs and concerns at the time, but it also allows you to kind of go back to it and continue to modify that plan because things change. This is all part of this more idea of, instead of a transactional sale, let's have some patient conversations to build the right solution that meets the client's needs and concerns as they sit today, with an understanding that this is all going to help them get to a point where they can retire the way they want to. Instead of just dumping numbers on them, which don't tend to work anyway, we want to make sure that what we're doing is trying to solve for their specific needs. There's a statistic that we use too much in a lot of our marketing materials, and considering it is DI Awareness Month, you'll probably see this one in any of the financial publications that you follow or get emails from. 1 in 4 people will become disabled for a period longer than 90 days, blah, 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 blah. Okay, well, a lot of people don't see that. They're not thinking that 25% of the people they know ever have been disabled. So that statistic, it just doesn't have the penetration that we would like it to have. What I like to counsel advisors to do is to really explain to their clients that the insurance company has the advantage of these large numbers and these statistics and analytics that tell them how many people in a certain cohort are going to become disabled. But for you and I, for the client and the advisor, it's either going to happen to you or it's not. And we want to make sure we have a plan for if it does happen. That's a more targeted DI strategy that gets away from just throwing numbers at them and actually just focuses on what's most important. Are you concerned about this? Do you understand it enough to be concerned? And if so, how much do you want to put towards protecting yourself so that you build in the stability, you build in this firewall that allows you to know that your chances of retiring the way you want to are that much greater than if you hadn't done it. This also leads to customization. This also leads to, again, an understanding of what they need to protect, what they want to protect, how much they're willing to pay for it. And that helps you to understand exactly what solution makes sense today. And again, that may change. 5 years from now, they may become much more conservative. They may realize, gosh, I don't want to tap into my retirement if I'm sick or hurt. Now I do want to make sure my plan is that much more robust. So customization takes a lot of forms, and that's really important because you're going to be in competition with other advisors who are throwing out the same old one-size-fits-all. If you're able to have these more patient conversations, it will set you up to very easily customize your solution for the client based on their needs and concerns. It separates you from others in the field. This is, a complement to life insurance more than it is to other products. There is a marketing piece that a lot of carriers use where they'll say, you protect your car, you protect your house. Why wouldn't you protect your income through insurance? Well, the challenge with using that dynamic is the fact that you're setting disability insurance right next to auto and home insurance. And auto and home insurance is more of a commodity. That's why it's advertised on the television so much. It's something that is easy to switch in and out of, or from one carrier or one provider to another. Disability insurance is a core piece of your financial plan, much more like life insurance. So when we make the connection, when we tie it in with other products, we want to tie it in with other products that it's similar to in terms of not only the value that it's providing, but also the permanence. I mean, one of the great things I think about disability insurance is that if you put a disability insurance policy in your plan with your clients and you do it right the first time, you're not likely to have to go back and write another policy again with them. It typically is a product that once it's done right, it's done once and that's it. You don't get the opportunity to say that very much with many of the products that we work with. Now, yes, there may be tweaks and adjustments, but it's great to know that once you put it in, it tends to be extremely persistent. People obviously still need this as long as they're working. And because the rates are such that you lock it in at the age you buy it, it's never less expensive than the time that you got it. And so it tends to be a very persistent part of your block of business. And it always gives you this opportunity to reach back out to clients on a regular basis just to make sure that it's still the right policy, the right fit for them. Last thing I'll talk about here on this is when you do encounter a client that does have a more complete income protection plan, because they say, well, gosh, I know what you're saying about an incomplete protection plan, but I've got stuff through work. That isn't a conversation stopper, or at least it shouldn't be. That should be a great jumping off point, because the first point is opening that conversation or transitioning that conversation into, great, you have something through work. I'd love to take a look at it and make sure you understand exactly what it provides for you. And if it's enough, that's fantastic. We know then that your income protection plan is complete, at least for right now. But if once you understand it, it doesn't meet all of your needs, we can supplement that with an individual policy. And for you, that individual policy will cost a little bit less because your employer is already picking up a certain amount of the risk. We're just having to add a little bit on top. That's a tremendous advantage for us when we're positioning it, because it's going to be less expensive, and it kind of emphasizes the benefits that they're getting through work, which again is the positive way of looking at it. If they have group insurance, we don't want to say, oh gosh, that stuff's terrible. That's really limited. It's probably not going to pay you anyway. That's a negative approach. The positive approach is, it's great that you've got something to get started with. It's very easy for us to supplement that if you don't feel like it's adequate. That's the positive spin on that same kind of positioning that, again, is going to put you in a much better light and allow the clients to be much more receptive. So let's wrap this up. When we're talking about kind of building this new conversation, it's really about having a conversation that affirms their decision to go through this planning process. I really look at this concept of demonstrating that you're concerned about their income protection plan as a key way to get their mind going, to get those gears turning. It sets up the patient conversation, because once those gears are turning, when you ask questions then to dive into the need, it's not asking questions to generate fear. It's just simply information gathering, because you've got them at a level where cognitively you are on the same page. That's the level we want to get to. We want to get them to a level where we engage and kind of move them up a level, and that allows us to enlighten them and provide them with the information they need to make good decisions. Well, if you have a client with a lot of information around a situation, what that is going to lead them to is the ability for them to make their own empowered decisions. They are going to feel complete and total control of the decisions that they make around their financial plan, specifically around their income protection plan. That position for your clients is going to be so strong, so beneficial for them, that when you're having conversations with them, they're going to take that to their friends, to their family, and say, you know what, not only did they talk to me about this product solution that nobody else did, but they made me feel good about the decision I made. That's the kind of behavior that leads to referrals, that leads to glowing reviews and raving fans. This is the kind of approach that I think is going to generate tremendous business for you in the future, because it's going to make your clients that much more engaged in the entire process, and that benefits all of us. So that's the presentation. Jen, I'll pass it back off to you.
Great, thank you. Sorry, I'm here.
No problem.
I just wanted to say thank you again for your time, Scott, and everybody else on the call. You know, you made me think about a friend of mine actually who fits this scenario perfectly. She's in her early 40s. She's single, and she has hang on one I have a daughter here who's now trying to join me on the call here. She's single. She's in her 40s, and she has left her job to now become, you know, independent. She works for herself, and she doesn't have the group benefits that you would normally get, of course, from working for an employer. So she's the perfect fit for that particular type of product. In fact, I've already had a conversation with her about it, and she understands the importance of it. Plus, she's had in her past, like in her, with her family, they've had some issues with health, and we cannot take our health for granted, no matter how young we are. Things happen in life. I have another friend who has a very dire situation, and she, of course, is getting to use her disability that she gets from her employer. But like you said, it's not always as robust as you might think that it is, especially if you have a severe impairment, which she does, and it's going to be long-term and terminal. And so, looking back, and she's young, she's, again, early 40s, she would have wanted this type of additional insurance, I'm sure, should she have even known it was an option, right? And a way to help protect that paycheck, if you will, for her and her family. So thank you so much for sharing those stories with us, for having, education around how to have that conversation with clients, or like whether they're prospects or whether they're existing clients, or even for ourselves. I think it gives us an opportunity to think introspectively about our own selves, our own businesses. So I really appreciate that. If there are there any questions before I kind of just pivot to, where to go from here? Are there any questions from anybody on the call?
Can you hear me okay, Jen?
I can.
Okay, Cheryl. So one thing I just want to say, besides the fact that this was very informative, I'm grateful for Scott's time. I'm grateful that, Jennifer, you and Anne Marie helped put this together, because I think these stories are important for us to hear, regardless of, how much people do or don't sell disability insurance. And one of the things I will tell you is, when people look at me and they see me on stage, and they're one of the first things I get all the time when I talk is, oh, she has so much energy. And I love that. What people don't know, that was when I was, I started off working at an insurance firm when I first got a job, and I wasn't going to take any of the additional benefits, FYI, that they were selling. And I remember the person who hired me said, I'll tell you what, if you go ahead and take all these benefits, he says, and you don't need them. I mean, first of all, that you think in your mind now, as I'm 20, 30 years into financial services, this is a no-brainer. But he's like, I hope you don't have to use them. But if you don't, and you leave here, I'll reimburse your premiums. These were group policies at the time. And I remember thinking, I was 20 years old, brand new in insurance. I'm like, yeah. Do you know that a year later, I ended up having a pulmonary embolism? I almost died. If it hadn't been for the disability policy, and I was, like I said, I was very young, had already had two children, and newly married, that disability insurance policy saved our family, because we were already dependent on my income coming in. And so these things they happen. Nobody plans for an accident. Nobody plans. I mean, I haven't met a single person with a disability that said, totally excited to have had this happen. Not one. It's just stuff that happens in real life. And I love the fact, the way how Scott positioned the conversation around it, because I do think it's one of those things where people either don't have that conversation to complement other things, or they compare it too often to, like, it's an extreme, it's an extra policy that we don't need. Anybody who's dependent on a paycheck needs a disability policy, period. And you can ladder it. And I think that's been one of the stories that's been missing. So that Scott actually talked about that, and this was very important to me to hear, because too often we go out for the elephants and want to do these, the high insurance, and I get it from a planning perspective, but laddering the coverage is so beneficial. And I'm somebody who laddered coverage, and if I hadn't done that, or somebody hadn't taken the time to do that, it would have negatively impacted my family. So I love the conversation around that today. So thank you for that.
Thanks for sharing your story, Cheryl. Really appreciate that too. So where to go from here? If you'd like to talk further about, any prospects that you might have about, again, how to have that conversation, we certainly can get access to this presentation from Scott as well. We certainly sell Scott's product. Thank you, Scott, for providing us with a very important product. And again, we partner with Truluma, who's our sister partner company with the processing and the underwriting aspect of DI. So we'd love to help you. My phone number and my contact information is up on the screen. I'll say it for those who maybe are not watching the webinar portion. It's Jennifer Connolly, 617-510-4371. My email is jtconnolly, that's CONNELLY at highland.com. And then my sales partner, Anne Marie Norick, is 716-523-3922. And her email is anorick, that's NORECK at highland.com. And we look forward to working with all of you. And thank you so much for your time. And Cheryl, thank you so much for your time and support too. And Scott, thank you as well. Appreciate it. Have a great day.